Welcome to Investors Insights. Our topic today is confidence becomes action. We chose that topic because throughout the year we've talked about how confidence from the consumer as well as corporations has continued to build, and now we're seeing that in action. Trey, you brought up some great points this morning, and backed it up with data about, everybody's talking about Black Friday, Cyber Monday, and we can talk about it, but the reality of it is what's actually happening. What's the consumer doing?
Right, and that's what's very important. The consumer can say in data they're going to spend money, but until they actually do, it doesn't really matter.
Talk is cheap.
Exactly,
right.
Talk is very cheap. It's free, in fact.
Right.
And so, just kind of little boots on the ground data. I'm one of those crazy people that go out on Black Friday, and this is probably the busiest it's been in years. And you see lines out the doors of these retailers, and the retailers also smartly built up inventory, so they actually ran out of stuff, which is good because usually they have too much inventory and then they have to sell it down. And so, just boots on the ground in Birmingham, we saw, a lot of people out there spending money. Then back that up with online, those who did not go out. We saw retail sales hit $7.9 billion on Black Friday, online retail sales. That's up nearly 18% year over year. So the people that have been saying, yeah, I'm more confident over this year, over the last high consumer confidence, they're actually out there spending, which is what you really need to see.
Well, and let's talk about that because we've had people say to us, how high can this market go? Will we continue to see this rally? Well, one of the things that causes stocks to go up has to do with earnings.
That's right.
And if retail sales are strong, that's saying the consumer is out there spending money. We're also seeing that on the corporate side as well.
Very important.
So it's one thing for us to talk about the strength of the market. Here we are approaching year end. And at the same time, looking at the data still continues to say that people are confident that they're spending money and that corporate earnings, which has been a big theme this year, corporate earnings continue to go up. Now, Ashley, you jumped in this morning in terms of just saying, additional data that confirm that. You talked about payroll and some other things, so talk about that.
Yes, one thing on payroll is, back to retail for a moment, you're going to have 13.2 million more paychecks coming out on December the 1st than last year.
Yeah.
So it'll push that too.
Because unemployment's lower.
Absolutely.
Yeah.
It'll
People
help.
working.
Just more out there. But on the corporate side, to Greg's point, we were looking at two key pieces of data that basically show now that corporations are out there spending in anticipation of the market being even better next year. And what they're doing is, there are two main ones. One is share buybacks. Right after the financial crisis in 2008, you saw a lot of buyback of company shares.
That's where companies say we've got multiple ways to use our money.
Correct.
We can innovate, we can expand,
build new
factories,
more people.
Exactly. Do all that, or
buy our shares.
We think our stock is undervalued and we'll buy our own shares.
Correct.
Okay.
Now, what they're doing is they're spending the money on large equipment and things to make more. I mean, that's what we really want to see. So if you look at that data, companies are looking at that and going, well, should I buy my shares back now with the money I've got?
Right.
Or should I put it into new equipment because we're expanding? The latter across the board is what's happening now. That's great to see. The second thing is, in October, that data came out, again, much better for that month. And we continue to have companies invest with confidence for the next wave.
Right.
So that's another reason possibly you could keep a rally like this going.
Right. Yeah, there's no guarantees, but at the same time, here we are with, 30 days, a little bit over to end this year, and we're seeing strength that could go into next year. So, and I think that, our viewers need to be aware of that. And Trey, you were going to add?
Yeah, I was going to say, the CFO's confidence, it shows long-term confidence. Buying back stock is easy. That's a short fix. Investing in a plant, that takes years to pay off.
Right.
And so that's very great to see that.
And on top of that, what you have is that corporate balance sheets are in excellent shape.
Right.
You've got a lot of cash where they can do it. You've got the borrowing costs are very low. It's a perfect setup. In addition to all of the good data, it's a perfect setup. You're in good shape financially to be able to do it.
Right. So as we've received emails and phone calls and meetings with clients who have said, this market has been strong, and how long can this go? The data is still saying there's still strength in this economy.
Absolutely.
There's still strength in this market. So on that note, continue to follow us on Facebook, Twitter, LinkedIn. We're going to continue in terms of our vlogs to share this information with you and hope you forward it to others who find it valuable. And at the same time, just know that we'll keep you updated still. And for those of you as clients in person and, phone calls and additional information that we provide. So we hope you have a great week as we end November and go into the 1st of December. And we're looking forward as we approach 2018 and close the books on 2017 of keeping you informed as to this market as well as all the other economic and political issues that are taking place. Have a great week. Talk to you soon.